Last week, we saw some nice moves in the metals. All three of the ones that I follow. Gold was up 1.5%, silver was up 3.5%, and uranium was up about 1/2%. It's obviously not a lot, but it's posted the 10th week of growth, which obviously I was happy to see. And even the uranium equities have started waking up. I don't know who did it, but somebody finally woke them up. It must have been a uranium asshole. And that's making my portfolio happy. As a matter of fact, that portfolio is even a little bit in the green, despite gold and silver's efforts to change that. So I no longer sleep on the doormat, so that's a good thing. Now, as I mentioned in a video last week, I've started putting together a free video newsletter weekly that you can, by the way, quite easily subscribe to by visiting resourcetalks.com. And in that newsletter, I invite different people to dumb down some of the happenings and moves in the gold, silver, and uranium markets to me. And I put together about 45 minutes lesson for myself. But in the newsletter that I published yesterday, I shared a clip from a conversation that I had with Steve Penny, where he walked me through a few interesting charts and told me what he thinks is happening with gold, silver, uranium, and even platinum, and where he thinks those might be headed.
Well, I mean, there's plenty of fundamental drivers and plenty of catalysts for gold to continue moving higher. And ever since we peaked on, I think it was March 8th at $2,078, I've been, expecting a pullback. And this is actually very healthy price action. Once we broke out of this triangle pattern back in, actually it was February, before the Ukraine-Russia tensions heated up, we had the breakout before then. So what we're looking for here is an uptrend, and that's a series of higher highs and higher lows. And the previous low was 1780. So really, we can even continue to pull back just a little bit more here. I'm not expecting that, but as long as we hold above 1780, we're still in an uptrend. And I think that's very likely to continue for the rest of 2022 and into 2023. And you mentioned the previous all-time high of $2,089. Once we get above that level, I think the move to the upside is probably going to accelerate with a conservative target over the intermediate term of around $2,500 on gold.
What do you think some of the fundamental drivers are going to be to sort of help us achieve that over the short term, but then moving over the long term as well?
Well, I think the big driver that is going to see gold move to new all-time highs and then silver make its eventual run up towards 50. I'm talking about over the next few quarters, not necessarily in the next few weeks here. So this isn't like a very short-term forecast, but I think it's no secret that the Fed is probably going to have to reverse course on this tightening cycle. And when that happens, I think that's just going to be rocket fuel for the metals, because let's face it, the Fed is trapped right now. They can continue to tighten policy into a weakening economy. And, that's obviously going to hurt the economy. So they can either cause a recession or they can deal with higher inflation. And history suggests that they always choose higher inflation. And that's going to benefit the monetary metals.
Okay, so that's true for silver as well. Is that the general fundamental case on silver as well? Or are you seeing something else on silver?
No, I think that's the same thing for silver. And what's happening right now is very typical in a precious metals bull market, where gold and the large cap gold miners tend to lead, and then the more speculative components of the sector follow suit. So silver has kind of lagged a little bit, and especially the junior silver miners have really lagged. And I think at some point here in the not too distant future, they're going to play rapid catch up.
So what are you seeing in the charts for silver? But it's interesting that you mentioned the miners, specifically when we're talking about juniors. They're not technically juniors. The GDXJ and the SILJ, they're small miners, so they're not the juniors that most people imagine. But they have been lagging. But it seemed to me like this week they were gaining some momentum again. On a not too, it was a nice move, 1.5%, but it was not too large. Yet they were gaining some momentum. So what are you seeing in the charts?
Yeah, one chart I really like to reference is the SILJ versus GDX ratio chart. And right now, that chart is forming, it's called the bullish descending wedge. And once SILJ breaks out versus GDX, which it's so close, it's right on the precipice of a breakout, we can, expect the junior silver miners to really begin outperforming the senior gold miners. So that's one chart I'm watching closely. It's just beginning to break out. We just need a little bit of confirmation. We could get that as early as next week.
Where does platinum come in to all that? Because that's a precious metal too, right? So are you expecting the same fundamental drivers to be behind it, or are you sort of worried that, hey, if the Fed causes recession, which you said you don't expect them to do, but if they do, the industrial demand is going to be much lower, and platinum really does depend on the industrial demand from the auto industry. So where'd you see that?
Yeah, platinum, I view it as a much more speculative metal, but one that has tremendous upside. To me, it's the only metal that has the potential to outperform silver. I'm not saying that it will, but that potential is there because on a historical ratio basis, it's undervalued relative to everything, including silver. And this kind of undervaluation is I view it as an opportunity that only comes along once every handful of decades, if not once every generation. So I think there's different drivers for platinum, although Fed monetary policy and inflation will certainly benefit that metal. But I also look at this shift towards hydrogen fuel cell technology. That's going to be a major consumer of platinum. So that's another bullish fundamental that I don't think is being priced in. And another one is substitution for palladium. A lot of these car makers it would only make sense for them to begin substituting platinum for palladium since it's less than half the price. And it's a relatively easy substitute. And then, of course, investor demand. I think as inflation continues to rage, and people want something tangible or alternative to general equities, that just makes platinum more attractive. So personally, I like a small speculative position in the physical metal.
So moving on, let's talk about uranium, because the week before that, uranium had a very strong 8 plus, almost 9% move in the price. This week was rather calm, just about a 0.5% move, but we're keeping the right direction, right? There's been, looking at the chart here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks in a row. This is the 10th week in a row that uranium, or at least the uranium futures, have been up. So what do you make of that, Steve?
I do. I had been expecting a breakout in the price of uranium from this triangle pattern that had formed. And I expected an upside breakout, but I did not expect this violent of a move. It's gone pretty vertical. Looking at the chart here, I'm looking at monthly candles. It was up about 13% in February, followed by almost 20% in March. And then here we are just 2 weeks into April, and we're up almost 10% this month. On the monthly chart, the RSI is getting extreme overbought. Now that doesn't mean we have to see a pullback because that RSI can stay extended for long periods of time, but it is something to take note of. At some point, we're going to need to see some consolidation in the uranium sector. That said, over the intermediate to longer term, I still think there's a lot of upside. And as far as the spot price of uranium or the futures price, $73 is the next chart-based target for me once we broke above $50.80, which was the previous high. So I'm looking for $73 uranium in the next, let's call it a couple of quarters, and then probably much higher thereafter.
That sounds pretty good to me. I'm sure that some people would look at this and they would say you're basically bearish because that's the only thing you expect. I like people.
Of course, yeah.
Yeah, I know people like talk about that $200 uranium, and hey, it could happen. When anything could happen. The fundamentals on uranium are just what I see. But it's a good.
To me, the more rocket ship symbol emojis that I see, or emojis like that on Twitter, the more caution signals I have over the short term.
Okay.
We're seeing a lot of those lately. That doesn't mean we can't keep moving higher, and I think we probably will. But we don't. Parabolic moves benefit the fewest number of retail participants, so we really don't want to see this just keep going vertical. Let's see some pullback and some consolidation, shake loose the weak hands, and I'd rather see a nice steady grind higher.
What do you mean by that when you say the parabolic moves? What do you mean by that?
Yeah, parabolic moves benefit the fewest number of retail participants. And what I mean by that is you get a lot of momentum chasers coming in, just chasing momentum. And at the first sign of parabolic moves often end with really sharp pullbacks. And most retail investors, unfortunately, don't have a predetermined exit strategy. So, they may ride it up, but they end up riding it right back down. And, it's the very few smart traders and investors and professionals who they sell into that strength, but your average retail person just doesn't, unfortunately.
That makes a lot of sense. What you're saying there is very important, but so that brings us back to the topic of having an exiting strategy and how much that's worth. Looking at the stocks, though, as measured by the ETFs, the URNM ETF appears to have been up 2.3% on the weekly, much less than last week, but it outperformed the move in the price of uranium greatly. So it's not yet overbought on the weekly, according to the RSI. So what do you make of all that?
Yeah, so we had seen the metal really go parabolic here, but the mining stocks, most of them still have not broken above their November highs. So they were due for a catch-up move, and I think that's just beginning. We could see that trend continue next week, where the equities outperform the metal. I think the best case scenario here would be if the metal price just kind of grinds sideways and consolidates for a few weeks or even a couple months, and the equities kind of slowly play catch up. That's what I'm hoping for, but the equities are undervalued relative to the metal.
Now, if you found any value in what Steve was saying in here, I'd suggest you check out his newsletter. He's actually just started his own silver, gold, and uranium focused social media platform. I'm on there. He's on there. Jeff Clark's on there. A bunch of other smart people are on there. It's like a Twitter for metals. So if you want to visit that, you can get a discount through the link that I've posted down below. And obviously, I will get a commission, which might help me stop buying secondhand clothes. No, I'm kidding. Secondhand clothes are great. This shirt costed me like, I don't know, $2. And my wife still likes me, right? So it's all good. Thank you for watching and have a good week.